now the only number that we have is the standalone one. On consolidated, so while we await the numbers, let's run our viewers through the expectations. We're working with a largely flat consolidated revenues, and that's because Africa continues to remain a drag, and the India business, where the execution has been fairly steady, but this quarter it will be impacted on the back of seasonality. So both Africa as well as India is not likely to do too much for Bharti Airtel, which is why on the consolidated front, the revenues are seen flat and margins are seen slightly down, close to about 50 basis points. Some key things that we will watch very closely. One will be on realizations, because that is what had disappointed the street.
1630 is the net profit number that has come in on the consolidated front. That's huge. Much higher than what
we have to just wait and see whether there is some...
to see if this is in fact the number or not. The consolidated press release is out on the exchanges.
Net profit is 1522.
Okay.
Even that's quite a bit, isn't it, Reema? Consolidated should have some extraordinaries perhaps.
1522.7 is the consolidated profit. That would imply just down 2% on a quarter-on-quarter basis, but significantly better than the close to 1200 crore that we were anticipating. So at least on the bottom line, the company has exceeded our expectations quite handsomely. One key reason for that could be, we'll await the forex. And
some more numbers to give you, Reema. The top line number has come in at 23851.9. So that is slightly higher than the estimates as well. 23,851.9 crores is the top line number. This compares to 23,743, which was your expectation, so slightly higher over there.
Yes, so the revenues have gone up by 0.8% on a quarter-on-quarter basis, whereas we were anticipating the revenue growth to be largely flat. So on the top line, it is looking slightly better than what the street was anticipating. Any color on what the India, Africa or the key parameters are looking like?
At this point in time, no. The India EBITDA margin, this is from the press release, has come in at 40.2%. So that is higher than what you were estimating, or what the poll was suggesting. This is reading out from the press release. The consolidated EBITDA has come in at 8265 crores, which is also higher than what the street was estimating. That's a growth of 6.7% year on year. And the India EBITDA margin has come in at 40.2%, which is up 1.6% year on year and higher than street estimates. So that's 8250 crores, which is the consolidated EBITDA in the press release is 8265 crores. So I'm reading out of there. Would this be higher than estimates?
Okay, I'm just, could you repeat once again what the consolidated EBITDA is?
Okay, there's an exceptional gain of 659 crores. That actually justifies that 1,522 crores.
Well, then would you worry about the profit in that case?
In the previous quarter also, there was an exceptional gain of close to about 1,400 crore, and this could be attributed because the company has been selling its towers in Africa. Remember, they just came out with the announcement recently that they've sold towers in close to about 7 countries. About 60% of the total tower base has been sold. So that could explain the exceptional gain. I'm not too sure if the street estimates were accounting for the exceptional gain, but this is not at the operational front. If the EBITDA margins have come in at 34.6%, that would be largely a good set of number and in line with street expectations.
All right, you just read out the numbers. We have Naveen Kulkarni of Phillip Capital who also joins in. Naveen, hi, morning. So the revenues, has slightly better than estimates, and the EBITDA number, the margin number is also slightly higher than estimates at 34.6%. What would your reaction be?
Yeah, the revenue number is pretty much in line with our estimates. EBITDA is higher than the consolidated EBITDA is higher than our estimates by around 3%. And I would assume even after adjusting the exceptional, which has been, I think, around 660 crores, the PAT number should be a little higher than what we were building in. So our PAT estimate was 860 crores. I think adjusting for that should still be a higher number.
Reema, you got a much higher poll number of 1,170 for profit. So would there be some people who would be disappointed with the profit at all if you remove the exceptionals?
Well, unlikely. Don't go too much by the profit figure because that gets impacted on a lot because of taxes, the interest costs. It's not at the operational front. The street basically looks at the revenues and margins, so I won't go too much that the exceptional is boosting the profit.
Naveen, so the revenues impress you?
Yeah, the revenue number is decent, and I think the impressive number is the EBITDA number. So EBITDA in a seasonally slower quarter, they have been able to maintain the EBITDA number. I think that's good, considering that also from an Africa perspective, Zambia, there was a huge currency depreciation. So taking all these factors into consideration, the EBITDA number at flattish on a sequential basis, YOY around 7% growth looks decent.
The India business EBITDA is also very strong at 40.2%, Naveen. This is compared to an expectation of 38.2%. How would you read into this, and do you think this could be sustainable?
Yeah, from here on, see, this is one of the weakest quarters. So we were expecting close to around 39.8% in terms of EBITDA margin. And if it's come at around 40.2, that's reasonably good. This is the weakest quarter for the Indian operations. From here on, with the onset of festive season and Q4 is generally stronger, these numbers should be sustainable.
Okay, India revenues are up 13.3%. The mobile data traffic at 137.7 billion megabytes this quarter is a growth of 76%. That's, of course, YOY. Any more comments on mobile data, Naveen?
Mobile data has been growing pretty strong. We'll have to look at the realizations. Yeah, realization. But again, realizations and the overall absolute revenue growth is also material, because that adds to the EBITDA as well as to the earnings significantly. So data in any case has been growing strong. Idea reported a 10% or rather 9.4% sequential growth, so that was decent. If Bharti does better than that, I would feel that they are gaining market share.
They say that the India EBITDA margin, Reema, is at 40.2%. Your poll had thrown up 38.2.
No, I'm getting it at 38.5%.
Okay, this is just the reported number from the press release. They say that their India EBITDA is 40.2. So probably there is a difference in calculation.
Yes,
what is your calculation compared to the poll?
Mine is coming at 38.58%.
Still better than your poll.
It's slightly better than what my poll is. So overall, I would say that Bharti Airtel's earnings are looking fairly steady. I'm still trying to calculate a lot of the internals. A few of them which I've managed to do. One of them is ARPU, so that's come in at 193. ARPU stands for average revenue per user. That's declined by 2.5%. And the point over there I'd like to make is that the decline there is a lot less than what we saw in the case of Idea. So strictly by the limited numbers that we have, if we have to compare Bharti Airtel's India business versus Idea, which is an Idea as a pure play wireless player in India, Bharti's numbers are looking a tad bit superior to Idea's. So that is an important aspect. So ARPUs have declined by 2.5%, but the decline is not as much as what we saw in the case of Idea Cellular. The voice revenue per minute has declined by nearly 1%, and this would be at least the 5th consecutive quarter where we've seen the voice realizations per minute decline for Bharti Airtel. All this is on a quarter-on-quarter basis, and that's where the problem for the industry lies, that the realizations are not going up, and that's what the management of Idea alluded to in the conference call, the realizations on voice as well as data perhaps are not going to go up from here on.
Okay, I think I've also got the overall EBITDA number coming in at 34.7. That's the reported number from the company compared to, I think, 34.4 that you mentioned. But I think their calculations are a little different from yours. Is there anything else that on EBITDA margins impress you? Okay, Naveen, have you been able to get more in terms of EBITDA margins that you want to comment on?
See, EBITDA margins for the India business is at 40.2%, so that's pretty good. And even the absolute number is decent. Overall, EBITDA margins are slightly, I would say, better than what we were anticipating. So the numbers from an EBITDA perspective definitely look good.
So based on these numbers, Naveen, what kind of... okay, hold on. There's some more numbers coming on the Africa business. The consolidated Africa EBITDA is at 1269 crores. This is slightly higher than estimates as well. This is flat on a quarter-on-quarter basis, absolutely flat, but it is slightly higher. The Africa revenues have come in at 6272 crores. So that as well is better than what the street was estimating. It's good to see that the Africa business is improving compared to street estimates and compared to to what they did the last time around. So 6272 crores of revenues compares to 6159 crores last quarter. So yes, they have improved the Africa business. Even the margins are better than estimated. Naveen, how would you read into this? Because, you know, last quarter we saw 7 quarters of margin contraction for Africa, but this time there seems to be some flattening out at the 20% mark.
Yeah, so from a perspective of the revenues for Africa have surprised, because we were looking at a revenue decline on a sequential basis, but they have managed to hold on, or rather at least improve the revenues a little bit. So from that perspective, I believe the numbers are looking reasonable. And yeah, margins, I would say that we were building in a much lower margin for Africa business. I think margins holding at around 20% and $206 million for Africa business EBITDA. I think that's also decent.
Okay. Reema, anything more that you can enlighten us on margins? Well, actually, the overall mobile data revenues have grown by almost 50%. The consolidated mobile data revenues is 3,806 crore, and the mobile data revenues in India itself has registered a 60% growth year on year. In terms of margins, the consolidated EBITDA has grown by 6.7%, and the India margin expansion is by about 1.6%. That's all that is year on year. Is that better than what the street was expecting?
Well, you know, net, my calculation for the India revenues, EBITDA is coming in at 38.6%. Okay. So maybe that 40.1 that they're referring to could be India plus the South Asia revenues. So I think that's something I'll still await on. But net, these are looking like a fairly steady set of earnings, slightly better than what the street was anticipating. So to summarize the numbers, revenues have gone up by 0.7% on a quarter-on-quarter basis versus expectations of 0.3%. Margins on a consolidated basis at 34.7%. These would 34.7% would mean a decline of 20 basis points on a quarter-on-quarter basis, but this is slightly better than what the street was, the consensus expected.